All right. First thing I have to do is, well, first of all, thanks again for having me here. It's been a mind expanding experience, and I had to change my whole talk based on what I've learned over the last couple of days. So the first thing I had to do is got to reduce the scope of my talk to what I have learned instead of what we have learned. What we have learned, I'm not sure, but it's much more than I've learned. So I'm going to report on what I've learned. Um, so when I came to the forum, I was convinced that for this talk, we needed to define leakage and quantify leakage. This was a critical thing because in my experience, it was a mushy term and it was being used in a lot of different ways. And I also found that in the hundreds and maybe thousands of technical papers that have been published on the geology and carbon storage, leakage is always an element of the topic, if not the focus. And so there's been a lot of quantification of what a leak means, et cetera. But um, I've changed my mind, or instead of making a pitch to this audience about getting better at defining leakage and maybe putting some quantification. I want to ask and stimulate some discussion around maybe it's better to be vague and solve things on a project by project basis than trying to educate the public or the business community on what we mean by leakage and why we don't want to say that word and da 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 da. So um, so I'm going to narrow the scope, give you some examples from my experience. I'm going to end up with some uh, topics for discussion, and I hope that I'm going to have a short talk, I think, and maybe make more room for discussion at the end. But I think there's pros and cons to defining leakage and quantifying it. Um, I kind of like Philip's idea of new units, cows. That'd be very valuable. There's an issue about mitigation. Mitigation, I'm going to show you an example that, Owen uh, Shell takes care of all the operational costs. You're not looking for help with mitigation if mitigation happens. So some of them, and well, I've got some other questions, but some of my comments are also going to be not so relevant to the work of the Shells, the Exxon Mobils, and the Chevrons in the world working in a well-calibrated European environment where the due diligence leads to a permit with 50 boxes of documents. Um, the majors really take very good care of doing their due diligence before they ever think about applying for a permit. That's not the case in the United States, and it's not the case in Canada, and it's not the case probably in the rest of the world. We're going to see um, a lot more diversity in the quality of the permits. I can tell you that in the Class 6 permits that I've looked at in the United States, the difference between a Chevron permit and a developer permit is light and day. It's not on the same thing. Anyway, um, so I'm going to start by setting the scene a little bit by borrowing some slides from my friends and colleagues at the University of Texas Gulf Coast Carbon Center. Um, 20 years ago, we had questions, a lot of questions, big questions. What's going to happen? Is a release even going to occur? Can we predict the magnitude of an impact? Can we communicate this to the public? Is that necessary? Um, Now we've had these long-running projects and a tremendous amount of research and especially communication among the technical community. Um, this is a slide that the international, what is it? Yeah. So basically, in a nutshell, messaging is that with almost a gigaton storage, there's no leakage. So why 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 is leakage a hot button on for most of the people that I talk to? and I think it's a question of different perspectives. And you'll see that I'll show some examples where leakage is the main topic of concern, even though we are largely thinking that leakage is important but insignificant almost. So let me just brainstorm with you some perspectives. The owners, and this could be the majors and developers, interested in containing costs to make the project profitable. And the majors do a fantastic job of a detailed risk assessment, bow ties on everything. And so when they come to an investment decision, they're confident internally that that they've got a real prospect. That's not the case for many developers. But owners are basically interested in saying that we hope that leakage is not an issue. Regulators, basically looking after protecting human health and the environment, leakage is in their mind. Leakage is written into the rules. Leakage is what they're testing for. So that's really setting the standard in terms of what owners need to respond to in terms of their applications. I've talked before about insurance. There's a distinction in the business in the insurance. And remember, insurance is just one little element of bankability, but it's an important element. It has to be in place. The brokers in the insurance business reach out to customers who want insurance or need insurance, and they're in business. They're in it to make a living, a good living, a living. And they want to enter this new market. They see, I mean, listen to the news. We're going to store gigatons and there's going to be storage complexes and everybody needs insurance. Wow, we should really think about looking at this. And so, they want to earn a fee. I'm going to show you an example or two from brokers where they're interested in the upside of risk. I mean, if there's no risk of leakage, that's good for them, but they still need the risk of leakage to be on the books. So there's a kind of an interesting motivation distinction. The carriers who are writing the policies really don't want to pay claims. So they're very happy to hear that risk is not there. But they also need to set an appropriate premium. What the carrier wants to do? Write a good policy, collect premiums, and avoid claims. So leakage is like a risk, and they want to know, is leakage real? Is it really going to happen? So they're quite interested in this issue. There's this issue of carbon credits. And, if you're generating carbon credits, and that's part of your revenue stream, how do you lose these credits if it leaks? That's kind of the basis of if you can get insurance that will cover your financial losses if leaks occur and you lose your credits and the credits are pulled back, or in the United States that the Internal Revenue Service pulls back 3 years of your tax credits. That's what they're worried about in terms of leakage. And then we've heard really in detail from Jan Erik the perspective of banks. Leakage, if you're a good operator and you've done your bow tie, et cetera, they're not worried about it. They just want to get a report that says you're consistent with your projections. Jan Erik is very conservative, but he's nowhere near as conservative as the Bank of America. Bank of America won't finance any carbon storage project unless it's a national oil company with the entire government backing it up. So they're in a different league. And I put legal on here because, at least in the United States, lawyers get things going. Lawyers make things happen, put teams together, et cetera. And it's their job to bubble up risks. And so leakage is something they're very interested in. So different perspectives, different motivations around risk. And that's why I thought it was so important to have a better definition of leakage or migration for the general public. But like I said, I'm challenging myself on that. and I'm going to challenge you guys with that too. I just wanted to show you, I mentioned before an example of a regulator being concerned about leakage. This is from Wyoming, which is a state in the United States that has primacy. They can issue the permits for a storage project. They published the risk table, which you can't read, of course, but it's in the slide if you want to study it. But every single one of those risks is tied to leakage. Here's an interesting perspective from Howden, which is a UK-based broker. They've issued a new type of insurance policy, leak risk insurance, and it just came out in 24-25. This is very interesting. They've clearly paid attention to what's being said about leakage, because what they're proposing here to cover all the project life cycle, including post-closure risk for leakage. We just heard from Jan Erik, it should be 1 year. And these guys are talking about covering the post. Anyway, the coverage is triggered through a verified leakage event as detected by the project's monitoring, verification, and reporting system, MRV, or whatever you want to call it. That's kind of a clue. I like, it's not linked to a specific volume. It's linked to how you monitor it. So maybe scaling down the monitoring program would help the whole program get your permit faster, and you wouldn't have as much opportunity to measure risk or leaks. Anyway, again, I want to point out, though, even though this sounds like magic, it's from a broker, and a broker is trying to attract attention to their offering, and then they have to go to a carrier to write the policies. And I'm not aware of any policies being written around this, but I'm not in their business. I just haven't heard of it. Has anybody else heard about anybody using this insurance? Is that a raised hand? No, you're just putting on your purse. Okay. Here's another one. Marsh is a broker that serves most of the major oil and gas companies in the world. They're also promoting comprehensive coverage, including a non-damage trigger for CO2 leakage. So they've got into leakage to the point where they're recognizing that there are a lot of costs around mitigation that won't necessarily stimulate a claim against a problem. I think that's quite a sophisticated perspective, and this is the kind of stuff I think, Owen, that you said Shell would just cover this kind of operational stuff. That's just in the operating budget. But if they're offering to cover, if there's a leak and it's not really an environmental problem, to fix it, to do some of the remediation costs. Again, a broker, but in this case, they've actually identified an underwriter, Canopius. Again, this is a company I'm not familiar with, but who will underwrite this. Has anybody gotten involved with that? No. Okay. My experience, the carriers focus on the unknown. Right now, the unknown is leakage. Kind of gone through all that stuff. Where am I in time? Oh, shoot. All right. I just wanted to touch on this. Lacking a loss history, right? There are no claims that I'm aware of based on leakage yet from geological storage projects. And really, how long would it take to develop a loss history for storage? 50 years? Who knows? But there is one that I think we should all be paying close attention to, and this is in Decatur, Illinois. Arthur Daniel Middle ADM company reported has a carbon storage project that evolved from a research project. Last year in September, they told the US EPA that they had seen CO2 migrate from the storage complex into an overlying aquifer. And in the UK, this would not be considered a leak. This would not be considered a permit violation because the permit includes the storage all the way to the surface. But this permit was written so that if there was migration from the storage complex, it was a permit violation. So it's very interesting. It's in process of being resolved. I don't think that there's any claim yet been made, but I'm going to watch very closely to see if ADM needs to go to their insurance, which they had to have to get this permit, to help cover their remediation costs. We'll watch. Could this might be the start of a loss history in our business. So for discussion, do we need to define leakage or not? Maybe it's better to leave that to a permit by permit discussion with the regulators, because leakage means so many different things to different people. And I'm not sure that spending time trying to define it and quantify it is necessarily helpful. So I challenge you guys. What do you think about that? Should we quantify leakage? Should we call it, it's not a leak if it's only 3 cows? I love that idea. Who's paying for mitigation? Is this now insurable? Faults, I have to say that after the preform workshop, I was unclear whether faults are seals or conduits. And if they can be both, how do we explain that simply? We're going to watch this ADM Decatur incident, and I'll keep Carrie informed about where that goes, and you can all check in with Carrie for an update. But also, finally, Arvid, great concept. If we don't have a loss history, can we model a loss history? Can we model it? And instead of waiting for 50 years, maybe help move that forward. So I'm going to close it up there. Hope I gave a few minutes back, but thank you. Thanks very much. Yeah.